Welcome to Investors Insights, where today's topic is three financial forces. Guys, a lot going on this week. Earnings is going to be the story this week, I think. Earnings really kicks into gear. A lot of earnings will start pouring in today, tomorrow, and the rest of the week. One thing to look at is expectations. It's no secret that expectations are really high. Since 2009, 69% of the S&P 500 companies beat expectations. First quarter, 79% beat expectations. So expectations are high. So it wouldn't be unordinary if we had some companies miss expectations because of the level. And so one thing to look at very closely is forward guidance. What are CEOs saying about the next 6 months? Also, what impact are the tariffs and trade war having on the companies and the trade? So, Trey, talk about oil potential relief at the gas pump.
That's
It's
right.
been expensive.
Yeah, we saw some good news this morning. Oil dropped below $30 a barrel, which is down from above 75. That's a huge move, and we should see down the road some relief on the gas pumps, which would be good because summer driving season. It's never easy to be filling up when you see a gas pump go up every week. So that should be good for the consumer, which is also great for the total economy because the higher gas prices have eaten into about half of the benefit of the tax cuts. And so if we see that come down, we may see the growth kind of pick up in the consumer, which is great going into midterms. So a lot of that's being driven by there's rumors out that Saudi Arabia has told some of its customers that they will increase their production and send them more oil. And then also the Trump administration has talked about releasing some barrels from the Strategic Petroleum Reserve, which would be huge. I think that's probably a political decision. Kind of get gas prices down heading into midterms. Very popular decision. Everyone likes paying less for gas.
Oh, yeah.
So that's something we'll be watching very closely because that has huge ripple effects throughout the economy and in earnings especially.
Yep, and earnings as well. Ashley, talk about housing. There is a supply shortage.
There
Tell
is.
us why.
One of the interesting things we followed on the blog for you is that after the financial crisis in 2008, the housing market just really hadn't come back like it was. And when you look at it, we've got 3% north of GDP growth. The economy is doing well. One would think that there would be a lot of spending on new housing, and there's some, but not to the level of what you normally think it was. So in delving down in that a little bit, there is, as Bobby suggested, a little bit of supply problem in that there were over 100,000 builders right before the financial crisis in 2000, building companies, yes. Now it's half that. It was over 100,000, about 48,000 now. What's happened is that industry, much like airlines did, has consolidated down to a few large builders that are doing the vast majority, about 10 of them, they're doing the vast majority of building in major markets in the United States. That type of industry is no longer fragmented. So it's been great for them, but in terms of the GDP as a whole, that's a lot of people in that industry that's exited stage left. And not only are the builders not there, but the ancillary purchases that go into the house, like any of your appliances, your furnishings, that's off too. So what we were debating this morning is how much better would this economy be if that industry had come back in the place that it was. And it also kind of tells you too that tax reform and deregulation has really worked because it's popped that GDP up without a major industry factor returning the way that it was. So that's very interesting to us.
Yeah, you see those large companies are less likely to make those very speculative builds that the small companies would have done in the past. That's
and also the smaller companies too, they usually use bank financing. Well, in Dodd-Frank, they didn't get as much. So it was just there are a lot of factors that just knocked a lot of that industry out and consolidated the rest, which long term is probably a good thing, but in the immediate, it's a drag on GDP.
Yeah. Well, a lot going on as always. Call us or email us with your questions. We love to hear from you. We love to talk to you. Have a great week. Thanks.